What's up guys, it's Daniel here. Welcome back to the channel. So today I'm going to show you 3 simple strategies that you can use to make more money when day trading. These strategies include the bull flag, the flat top breakout, and the ABCD pattern. This will just be a basic overview of each pattern and how you can use each of them to your advantage when you're day trading. Just a note, I also use level 2 and time and sales when I use these strategies, as they both give me a lot more information about what is going on exactly with the stock price. If you want to learn more about level 2 and time and sales, please check out my channel, as I have more videos that go into greater depth and detail. Also, these strategies are most effective when they're used on a stock that has a catalyst and higher than normal volume. Personally, I aim for stocks with a lower price, generally under $12 and with a float of under 20 million shares. So if you are watching stocks with very low volume, these strategies may not work very effectively. So if you're new here, please consider subscribing and hit the like button. Now let's go to the computer and we can start with the bull flag pattern.
Okay, so basically a bull flag is created when a stock has had a large move up on high relative volume and then has a period of consolidation where the price pulls back a little on lower volume than the initial move up. So on this chart here, you can see that the stock has had a large move up just here, and the volume was relatively high. And the next part of the chart you can see here is the price consolidating, and the volume dropping off as well, which you can see down here. This is where you want to keep an eye on the stock and watch for the first candle to make a new high. When this does happen, there will generally be a surge in the price. And in this example here, as you can see, when this candle made a new high, there was a large surge in the price straight up. Just remember to keep your stop loss at or around the lowest point of consolidation of the previous candle. Also, make sure that the stock does not retrace more than 50% of the original move of this candle here, as this could be considered slightly bearish. Now you can use this strategy on different time frames. I generally watch both the 1 minute and the 5 minute charts for these patterns. And this is just another example of a stock that had 4 bull flags on its move up. And as you can see here, we have a price move up and then a period of consolidation here. Then just on this candle here, you would buy the first candle to make a new high, which this one did. Then we have another price move up here, and once again, consolidation coming down. Then you would buy this first candle to make a new high. And as you can see, the price went up again, creating another price move up. Once again, price consolidation coming down. Then once again, we'd buy this candle when it makes a new high. And as you can see, it made another move up. Okay, so let's take a look at the flat top breakout. So in this chart here, you can see a flat top starting to form. There's an initial move up here on slightly higher volume, and then there is a period of sideways consolidation just along here. Now, once this candle here makes the new high of day, this is where you'll want to take your trade. And once the breakout happens, start to take your profit. Generally, I'll set my stop at the low of the previous candle, which would be just down here. Now make sure that there's not a large dip during this consolidation period here, as that would be considered bearish. You want to make sure this sideways consolidation is relatively tight. And finally, let's have a look at the ABCD pattern. The ABCD pattern is a common strategy that shows up on charts quite often. It's definitely worth learning. First, you will want to identify that the stock has made a reasonable move to the upside, and then there is a small pullback here, and this here will create point A. There will then be another move up in the stock to point B, which is right here. At this point, there will be a consolidation and pullback in the price down to point C, which is just here. Now, with this pullback to point C, we want to make sure that it finds support at a higher point than point A. So we have point A down here, and we have point C here. So in this position, this is fine. Once we can confirm that it has found support here at a higher level than point A, we will want to look for an entry into the stock when the price breaks the high of point B, which is here. Now, if the price does drop below point C, it'll be time to exit the trade, as it may not create an ABCD pattern.
So that's just a quick and basic explanation of these 3 different patterns that you can use to help you to be more profitable when day trading. Now, if you haven't used any of these techniques before, I strongly recommend that you use a trading simulator so you can refine your entry and exit points before you start using real money. I hope you found this video helpful, and if you have any questions, please leave a comment down below and I'll get back to you as soon as possible. And as always, please like and subscribe.